Folks, welcome to the Contrarian Trader. This is Bob Desmond, and this is best stock chart follow-up from last week. And we're going to review the very same symbols we discussed. If you watch this on YouTube, I'm going to link to that video at the back end of this video, along with my video with regard to cryptocurrencies. But before we get to the charts, I want to talk about membership. Right now, the silver and gold memberships are closed. Well, and I say that on the videos often that those plans are closed for capacity reasons. I can't service any more members, but I don't shut down the ability to sign up. Now, that's just a technical issue for me because I don't know how to do it. So please don't sign up for these levels. When we expand capacity in very early 2018, we will reopen. And I have some tutorials that are going up there as well that aren't completed yet to my satisfaction. So wait until 2018. But if you want exposure to my commentary, please just sign up for the bronze level membership. It's very, very reasonable. And the bronze members first get notified of new openings in silver and gold. So that's the value. Then I send it out to the email subscribers who get the free commentary each week, plus the video lessons I send out. So if you're not currently an email subscriber, enter your email address. We hate spam too. You will not be spammed. And if you watch us on YouTube, StockTwits, or Twitter, follow me there, subscribe. You know the deal. All right, so that's the housekeeping portion. Sorry to take up your time with it, but it's worthwhile discussing. All right, let's get to the symbols I want to discuss from last weekend. Again, I'm going to post to the best stock charts from last weekend at the end of this video. You can go and check it out. It's also posted on the website, StockTwits, Twitter, and YouTube. Okay, the symbols that I go over are listed down below if you're watching this on YouTube in the video description area. If you're watching this on the blog, you'll see the listed in order by which I will review them tonight. So just if you want to cut to the chase and go to your video directly, that's how you do it. All right, let's get started with EYES. I mentioned that we had booked profits the week prior way up here, right at the top. And we expected a pullback. We got the pullback. And we bought back the shares that we sold up here earlier this week. Now, I'm not willing to add more just yet, because what I want to see, because I'm satisfied with my current position, what I want to see is a breakout above this, let's call it a bull flag formation. I think that we have another couple of weeks to go of consolidation within this channel, and then we will buy the breakout, because we want at this point in time to buy on strength. We were buying most of 2016 as we began to show strength. And that's the game plan. That's what we're going to continue to do, buy on strength. That's the market validating that the stock is making higher highs and higher lows. And we want to buy as we see a continuation move higher. So members, more to come regarding EYES. BHP Billiton, weekly chart. I mentioned that we would probably see a move higher this week. We got that move higher by nearly 2.5% thus far. Am I willing to buy right now? No. While we are trading up above resistance, we haven't closed there. And that's what I teach members. It doesn't matter where you trade intraday or intra-week. What matters is where you close at the end of the chart time frame that you're looking for. Case in point, weekly chart. If you're watching for a breakout on a weekly basis, you don't buy the breakout on Tuesday. You buy it just prior to the close on Friday to ensure that your breakout has succeeded, or on Thursday if you feel confident enough that the daily chart still looks strong and that it appears poised to close above resistance, and then set your stop on a breakdown below that support level. So we're not ready to buy just yet. Very close though. We have a breakout on a RSI, so we have an indicator validating the breakout. Volume is light this week as expected. Folks, volume for the remainder of the year is going to be dramatically lighter than what you are accustomed to, given the holiday season. So Remember what you're dealing with right now when you're buying stocks or selling stocks. You're trading against a computer. All the big shots on Wall Street, they have jumped on their private jets and they're out in Aspen getting ready to celebrate the holidays. The computers are in charge. So understand it, who your counterparty is when you're putting on a trade. They're literally not human. Apple. We expected a breakout. We got the breakout. We are currently trading above the upper band of resistance. Stokes are rising. RSI is rising. It's looking pretty good, assuming that we close out the week above this upper band of resistance. For a light volume week, volume is okay. We have 2 trading days left to go. Next chart up, Cheniere Energy weekly chart. We are very close to pulling the trigger on LNG. The daily chart is setting up rock solid, a tight consolidation. We have a clean breakout of a triangle formation. You can see here that we have found solid support at, let's call it $46 per share. We have a bit of resistance up here. Let's update the chart. Okay, so we are leaning into the upper band of resistance here, which I've just drawn. No breakout yet. Now, if we close above this upper band of resistance, we'll be looking to put on a small trade on LNG. I like to call it scratching the itch, get some skin in the game, but not too much, just in case the breakout fails, your loss is small. And then look to add more on a breakout above this really serious resistance level here at, let's call it 51.51. We have our stochastics are rising, good stuff. RSI looking good. LNG looking very good. Members will talk more about the daily chart. The next chart up is STAR, S-T-A-R, the symbol iStar Inc. So we looked for a breakout this week above this tripwire, this early warning signal here, and we got it. However, what we're seeing right now is a bearish key reversal on the week, assuming that we were to close out the week today. We still have 2 trading days left to go. For all I know, this stock could be at $100 per share on Friday. Right now, though, it does not look like a good setup. And if we do close, as it appears right now, at the lows of the week, you should expect to see a retrace, probably down to this lower band of support. We have our Stokes, which are rolling over a bit. And that's healthy because you're forming a nice base, similar to what you did back here, and then just launched this big bull run. The problem with this rollover is that we may undercut prior lows. So don't be a bit surprised to see that. So if you're looking to buy this stock, I wouldn't do it right now. I would wait to see how we close out the week. So for right now, I would avoid STAR. We'll keep an eye on it. AIG weekly chart. I mentioned over the weekend that we were in a trading channel. We came close to hitting the very low of that trading channel. The bottoming tails on these candlesticks here implied that support was going to hold, and sure enough, we have an up week thus far, but it's not a new weekly high. So this is not a buy to me just yet. What we could do is similar to what we did with STAR here. Note how I put up an early warning signal, basically a tripwire that tells me that we're moving off the lows of this trading range and now beginning to move towards the high end. So with AIG, let's update the chart. Okay, this is better. Now we have a tripwire, a line in the sand that tells us when it's safe to go buying AIG. If we close above this upper band of resistance, it will mean that we have a new weekly high. Does that mean it goes shooting straight up? It could, but in all probability, it's going to pull back and retest the breakout point, then move higher. So AIG I still like, but it's not at a buy point just yet. Ultimate Oscillator, breaking out this week. Good stuff. Higher lows on stochastics. This is why we put our lines up. We want to make sure that we're seeing higher lows before we put on a trade, and then we'll look for higher highs as we look to add to that position. PDLI. And so we broke out earlier in the week, but we gave up those gains, and we are now trading lower on the week. It still remains on our watch list. I discussed over the weekend on the week ahead commentary with members the catalyst I believe that would send the stock higher. That catalyst is still in place. Right now, though, we need to see a rally and an up week before we even think about putting on that trade. So right now, it remains a watch. Volume is very light so far this week, which is good. We're forming a double bottom setup, I think, on slow Stoke. And if it forms above 20, very bullish stuff. Beneficial Mutual Corp, we're up so far on the week. We were higher. We did back off some. Remember that we have interest rates that are breaking out now dramatically. That should help the banks, depending upon what their business is. So the prior week, we had a bullish key reversal. We do have a follow-through week this week, new weekly high, but it's just barely holding on to that gain. Volume is good so far this week to the upside. Good stuff. Watch out, possible lower high here on Stokes. That's not good. All right. Our ideal entry point is a rally up and through 1750 and, of course, a close above that level. Now, I would consider if we pulled back and did another retest of the breakout point here, scratching the edge, get some skin in the game, small position, and then add more on a breakout. So that's a strategy I like to adopt. Low risk, high reward. Because we know that if we buy on the pullback and we close back down into this trading range, you need to stop out because that's a bull trap. And we don't stay long of stocks that are bull traps. Brookline Bancorp, another bank. They're not really doing well this week, despite the fact that we have a breakout on yields. So that's a concern. Even Goldman Sachs was down. So we don't have any breakouts yet on the indicators. Price had broken out earlier in the week. It has given it back. The thing we need to concern ourselves with, folks, is this. Do we have a sell the news event with the passage of the tax plan? Something to keep in mind. Remember, a lot of the gains we've seen since October have been fueled because of the tax plan. So it's buy the rumor, sell the news. California Amplifier, outstanding chart, double bottom setup on RSI, double bottom setup on stochastics. We are breaking out on a weekly basis. We're slightly off the highs of the week, though. Ideally, we close at the highs of the week. Members, we're going to be talking more about camp. The Deutsche X trackers, I still don't know what they do. I said I was going to look into it. I didn't look into it yet, so my apologies. Anyway, a concern here. Right now, we are in the tightest range within a triangle formation. And what you're seeing here is a hollow-filled candlestick. That's a sign of indecision. You do not want indecision at the top of a trading range. So this is one I would not buy right now. I would wait for the breakout. If you're not long of the ETF, you don't need to worry about whether or not it breaks down or breaks out. You just need to worry about the breakout because you don't have any skin in the game yet. So relax, sit back, and simply watch, buy the breakout, and then build on strength. This is a concern. If memory serves me, I mentioned this over the weekend that this setup here on Stoke RSI was either a double top or a double bottom. Guess what? It was a double top. This support level here should have held. It didn't. We broke down. While we're up this week, we still have a breakdown on Stoke RSI. This is what I like to call sloppy action. I would not buy this ETF right now for fear that it might break. Riot blockchain. Okay, over the weekend, I talked about this. I even played some commentary I discussed with members regarding Riot. And I said, yes, it's overbought, but it can go a lot higher. These blockchain stocks, these cryptocurrency stocks, like Bitcoin, which is correcting horribly right now. I'll link to the video I did with regard to the cryptocurrencies at the end of this video. It's called Cryptocurrencies Buy or Bubble. Back to Riot again. I digress a little bit. All right, so I said that Riot, while it looked overbought, it can go higher. If you're going to trade it, fine. Use a trailing stop loss order. Why did I say that? What value does that trailing stop loss order give you? Well, Folks, this is a sign of a top. This wick on top of this candlestick. Some call it a shadow. Some call it a topping tail. I like topping tail. It's a sign of sellers above. Resistance. So had you had a trailing stop loss order in at, say, 5%, which is kind of tight for this stock, let's say 10%, you would have been taken out already out of the stock. And you would have captured much of this gain. The high of the week was 46.20. Where do we close? Down a full 10 bucks. So that's why I advocate using a trailing stop loss order when you're trading, especially overbought momentum stocks. Volume this week remains very good, but remember, a lot of sellers in there too. Gold. I called a bottom in gold last week, early last week, and we have rallied this week alone about 1%. But since that point in time, we've rallied about $30-odd off of the lows. I think we've seen the low here on gold because of a few things. One, the tax plan, which they call paid for, is not paid for. We're still going to be running $1 trillion a year deficits plus some. And while I'm all for tax cuts, I am all for spending cuts, and we got none of that. So gold, I spoke about over the weekend. I said I couldn't buy the metal because we hadn't broken out above resistance. We are there now. I suspect that we will close above this level and will probably retest the breakout point. So we're very close to pulling the trigger on gold. I'm already long of the gold stocks, and we'll be looking to add more to that as well. Okay, the last chart up is the TZA. We had booked profits on the TZA in anticipation of this Santa Claus rally right here. And you can see that we have pulled back dramatically. Now, we have broken out last week, and we are poised to retest the breakout point. I'm looking to reopen this position maybe next week or the first week of January. Now, this will not be aggressive buying. I have a very systematic way of opening positions and adding to them. So we'll scratch the itch down here. Then we'll look to buy the breakout above this upper band of resistance, and ideally a close above 15.03. Why does that matter? It matters because we will have taken out the most recent high. So we will have a higher high in place. And we will have recaptured a support level, now currently resistance. So I don't want to get overly aggressive here. The chart of the Russell 2000, the NASDAQ, they still look strong. So we don't want to get overly aggressive to the short side. Not quite yet. The market's going to send us a signal of when it's time to short this market. In terms of indicators, they're looking very strong despite the fact that we're seeing weak price action. You have stochastics, which are diverging. They're breaking out. RSI, not quite yet, but very close. So members, more to come with our short strategy for the market in our weekend strategy session. And that's it, folks. Again, if you're not currently a member, our gold and silver levels are closed. Sign up for the bronze. You get notified when the silver and gold levels are open for new members. And if you're watching this video on YouTube, please subscribe to my channel. Leave a comment below. I will get back to you. Same deal if you're watching this on StockTwits or Twitter. Follow me there, leave a comment, and I will get back to you. Everybody have a really great holiday season. Merry Christmas, Happy Hanukkah, and a Happy New Year. I will be working this week, so if you have any questions, please, again, leave a comment. If you're a member, just shoot me an email, and I will certainly get back to you. Everybody have a profitable trading week. Be well.